Good morning, I'm Nigel Croft and this is TA for Traders on Friday the 10th of March. In this short video we'll be concentrating on the WTI oil price. It's fallen heavily this week. We'll see that it had a bounce off the 200-day moving average, and this is the key level that needs to be watched for the medium-term trend. We'll see on a very short-term 4-hour chart that we've had a double bottom in the RSI, and that's indicative of a bounce up to about the $51 level. Thank you. So first of all, I want to look at the daily chart, and you can see that we had the break downwards on Tuesday and Wednesday this week. On my Monday video, I had been concerned about the market and the rolling moving averages and the RSI, etc. Anyway, we had the breakdown. You can see here that on Wednesday, the 200-day moving average gave the support. As we'll see on a longer term chart, excuse me, this is an important trend line, important support level for the market. You can see that it held this base in August of 16, and then again in November, and then we had the bounce up from there at the end of November. So we've come back to that level. Market on the daily RSI slightly, well, it is oversold, now down the RSI at 29.95, and the MACD have rolled down, which are indicative of downside momentum. On the longer term chart, the blue line here represents the 50-week moving average, which is close to the 200-day, and you can see how it's been a key influence on the market. Held it there, as we said, last August, and then gave the support in November before we had the rally, and you can see that it's very close here again now. The RSI here has just tracked down below the 50 at 47.06, and the MACD are just rolling. So you're starting to get slight negative signs on this longer term chart. But the key is this moving average. And let's look at it again on the daily. You can see here on the daily quite clearly it gave the support yesterday. And what are we expecting in the short term? Well, let's look at the 4-hour chart. This is the 4-hour chart. You can see the breakdown. You can see the moving averages all tracking down very heavily. On the RSI, we have seen a slight non-confirmation, a double bottom. You can see here that when the market hit the low there, that the RSI load at about 16.46. Market bounced slightly from that. The RSI unwound, went back up. Then we've had another sell-off, and the RSI this time load 16.88, so slightly higher, and then we've had a rally. Now that is kind of indicative of a non-confirmation, as we call it, in that the RSI selling pressure wasn't as great in the second sell-off, so you would expect a rally. Where would we expect the rally to go to on the short-term chart? Maybe up towards the moving average. Obviously, this is the 24-hour moving average, so it will be tracking down very quickly every 4 hours. And so, by this afternoon, it would be below 51. And that will give the resistance level. So maybe a short-term rally up towards the 51 level would be warranted. And also you can see the MACD are about to turn. So that would be again indicate that maybe we are going to get back up to the 51. Looking back at the daily where the 51 is, it's a nothing level. Perhaps it's the resistance here that we had back in January, the second week of January. So that could be the resistance level to watch. Looking at the longer term, the resistance levels, There's 50-day 52.85, 53.62 above there, and then on the key support, as I've said, is this 200-day at 48.67, then 44.82. But as I said, there's a potential for a rally up to the 51 level, where there'd be resistance there. The 200 days at the key support to the downside. Do watch that. Thank you very much for watching this special edition of TA for Traders on Friday the 10th of March. Please do look at the disclaimer that's coming on the screen. Thank you.